everyone. Another quarter is behind us in 2025, if you can believe it. So it's time for us to check in on our quarterly Manhattan market report and find out what's going on in the real estate market in New York City. It's been a very interesting spring season in the Manhattan real estate market. So if you are thinking about buying or selling, stick around until the end of this video so that you can have a lot more data and understanding of what's going on in the New York City real estate market. I'm Dewey. I'm your New York City real estate resource. Please take a moment to like, subscribe, hit that notification button so that you can stay up to date on all things New York City real estate, and let's get started. So as I mentioned, there have been some very interesting things happening in the spring market in New York City, and overall, I'm happy to report that the New York City real estate market is healthy. We're pretty much in a good, steady, normal market despite all of the fluctuations in interest rates, despite what may be going on in the housing market in other markets, and despite the volatility in the markets on the whole and what's going on in the world at large. New York's doing pretty well, I have to say. So let's dive into some things that are interesting, and stick around because I'm also going to cover a little bit about what's going on in the rental market, which is kind of a big deal in Manhattan right now and will eventually affect the sales market. But as always, let's talk about supply in Manhattan. Now, we always tap our friends at Urban Digs for all the latest information and data and analysis because they do a great job on the Manhattan market specifically. And if we're looking at the supply, you can see in this chart that we started off the quarter and the year very slowly, but we really got a good amount of supply on the market. It looks like we're pretty much in a normal season when it comes to the supply on the market. You'll see earlier in 2021, those were the years where we just had so much supply and deals were happening right and left. We're not quite in that market, obviously, as you can see that huge spike on the chart, but we definitely have hit the highs there, if not a little higher than the past few years. So I would say that supply is pretty much normal for right now. We do see it going down. That's also a normal sales period for this time of year. We have two sales periods in Manhattan, usually in the spring and the fall, and then sandwiched in between that is the big rental market for the summer. Of course, things sell all year long and there are transactions going on, but those are the two peak times. So it would be normal as we begin heading into the third quarter and into the summer months for the supply to begin to drop off because sellers will probably now wait for any new inventory to come on in the fall. But of course, it's been a really strange season and a really strange couple of years in terms of some of the ups and downs. So there may still be inventory that trickles on the market. We will definitely keep a lookout on that. But again, supply pretty normal for this time of year. Now, the next thing that we look at is the liquidity in the market, and that is a measurement of supply and demand in the market. And as you can see from this chart, you'll see that we broke out of that neutral territory, which is really good. For a while, we were a little bit higher. Now, we cannot claim that as being a great seller's market because, again, if you look at 2021 and the earlier years where we were really in a seller's market, we were high up there. You see those spikes on the chart, and that's where you want to be if you're in a true seller's market. We have predominantly been in a very neutral market. Again, we did break out of that, but you'll see now as the summer months are coming in and we're entering the next quarter, that liquidity is going to come down. It may spike up a little bit here and there, but probably not going to spike up much again until the fall, and we'll see what happens. Now, the interesting thing about this liquidity and about being in a neutral market is I believe deals can still get done, and they are being done every day. There just has to be some more compromise, right? So sellers, you have to be very realistic about how you're pricing your units. You might have to come down in price to meet what the market will support for you. Buyers may have to go up a little bit despite the interest rates. I think the interest rates and the idea of where the interest rates are going to stay in the future coming months and years possibly, that's sunk in. I think we're all used to that. Although I always say when I bought my first place years ago, it was 8 6.5%, and that was the good rate. So 6.57, it's all sort of relative in my mind, and certainly if you look at a 50-year mortgage interest rate chart, you will see that the sixes are the norm. We've gotten a little over that hump of what happened to the 2 and the 3%, so a little bit more of an understanding of what's going on in the market. And again, in a neutral market, if sellers can come down a little bit and buyers can come up a little bit, we really can meet in the middle and good deals can be done. Now, the next thing that we look at is the market pulse, and that usually spits out a whole number that tells us whether or not we're in a seller or a buyer's market. This supports the chart that goes along with liquidity in the market, but as you can see, we're firmly in a neutral market and have been for quite some time. I don't anticipate that that's really going to change, although we are looking forward to possibly a healthier sales market that might flip to sellers depending on what's going on with those rentals in the market, and we will talk about that in a little bit. But that may help the sales a little bit, which may push us a little bit more into a seller's market. But for now, we're not really in a strong seller's market, not really in a strong buyer's market. We remain in that neutral market, which I broke down earlier, where deals can get done. Now, the next chart we're going to look at is the pricing, penalty, and rewards for pricing your unit correctly on the market. And that's extremely important. And again, I think that the message has kind of gotten to the sellers that you're going to have to bring down the price a little bit. You may still make a good profit. We'll talk about that in a few minutes, but you may need to bring down that price to meet where the market will meet you in order to create a deal. So this chart is a general chart. It highly depends on what neighborhood you're in. The statistics for the West Village against the whole market in Manhattan is going to be extremely different, right? But there's still a discount happening in the West Village when there's usually no discount happening in the West Village. So that's the kind of thing that we take into consideration. But in general, if your unit is priced well and it stays on the market under 60 days, you're looking at settling at a 1% discount. In other words, 1% off your listing price. That's the average. That's not bad. Again, 1% off in an area where perhaps there's usually no discount whatsoever and things go above asking is actually still a good deal. So you're looking at 1%. However, if you price your unit a little higher and if your unit stays on above 120 days, we're looking at an average of a 9% listing discount. So there's the penalty. The 1% is the reward, the 9% is the penalty. So you want to make sure that you're looking at the market in a very realistic way and deciding against all of your costs and the amount of money that you want to make if you're pricing your unit well enough to withstand what the market will do for you right now. Again, taking into consideration liquidity and the market pulse and the fact that we're in a neutral market, you can still see that even in a neutral market, if you price it well, you may only lose 1% off that listing price. So think about that hard whenever you're choosing the price you're going to list your units at. Now let's look at some of the average sales prices. Now again, this is across Manhattan. It's going to differ from neighborhood to neighborhood. And remember, sometimes those neighborhoods are simply street to street. And certainly in Manhattan, the prices vary from building to building in every neighborhood. So take all this with a grain of salt because again, these are on the average numbers we're looking at. But on this chart, you'll see that the median sales price is $1,230,000. And that's a year-over-year percentage change of 0.25%. So with everything that's going on in the market and the neutrality of the market, prices are up. So you can take that into consideration in terms of how, on the whole, Manhattan real estate usually does appreciate. It's just a matter of how much is it going to appreciate. Now, the average sales price, which of course is different from the median sales price, is $2.24 million, and that is up 4.7%. So again, prices are up in the sales market in Manhattan. Good news for sellers. And the median price per square foot, which really is a measure of condos versus co-ops, because again, with co-ops, you're not buying square footage, you're buying shares in the company. But it's $1,428 per square foot. That's the median. And and that is up 1.4%. So in terms of all the prices in Manhattan, everything seems to be trending higher. Again, how long will we be in this neutral market? Well, it depends. If prices continue to go up and the demand is still there because of perhaps what's going on in the rental market right now, then we could absolutely see us move back into a seller's market quicker than what some people may think. Now, I keep mentioning rentals because it is a factor in the sales market. The choice between renting and buying is a huge one in New York City because New York City is such a large rental market. Now, I did a whole video on this and I recommend that you go check it out, but the Fair Act in New York City became law just last week. And in 1 week, we've already seen two things happen. We've seen an enormous amount of rental inventory come off the market for any public-facing websites. So in other words, there's a lot of inventory that the public will no longer see because of the rules and regulations around how commissions are paid. In addition, because the landlords are now having to pay the commissions to any agent that they have hired to work for them, we have seen almost an overnight increase in rents by 15%. That is a huge and very fast price adjustment to see the rents go up that much literally overnight. Now, will it stay? We don't know. That's going to be something that we have to check the data for in about a year and really understand what the Fair Act may or may not have done in New York City real estate. But the reality is, especially for that area, maybe in studios and one bedrooms, if you're going to have to start paying $4,000, $5,000, $6,000 for these small spaces, at that point in time, you may begin looking at the buyer's market and say, well, you know what? It is more economical for me to buy. We haven't been necessarily able to say that for a while. If you're in the luxury market above $1 million, $2 million, $3 million, oftentimes that really doesn't apply. But buyers who are looking for under $1 million, it absolutely begins to make a difference. Because if you're going to have to start paying $5,000, $6,000 in rent for smaller spaces because the rents have increased because of the Fair Act, you may actually start looking at buying and say, well, it's actually more economical. I'm going to save money, maybe get a larger space or at least a comparable space, but I'll also be investing in equity. I will have property. I will have an investment that's going to appreciate in the future. So the choice becomes where to put your money. Now, we haven't really been able to say that recently, especially for people outside of the luxury market, because the interest rates were so high. So in some cases, it no longer was absolutely a better choice to buy. You may have found a more economic choice by renting. But with these rents going up 15%, and certainly if they stay that way and continue to increase as they usually do year over year, for many people, buying may become a more economic choice. So we'll have to see how the Fair Act really plays out, what the data looks like in long term, and if it's going to have an effect on the sales market. Nobody has a crystal ball, so we have no idea what's going to happen from day to day, from week to week, from quarter to quarter. We can certainly look at the snapshot now. Overall, I'll say again, this quarter was a healthy one. It's going to be very interesting to see what happens in the last half of the year. And I hope you'll join me for that as I do more quarterly reports and more information on what's going on in the New York City market. Again, I'm Dewey Moss. I'm your New York City real estate resource, and I would love to help you with any of your buying and selling needs. All my contact information is on screen or below in the description, so feel free to get in touch with me. Be sure to like, subscribe, and hit the notification button so you know when we release new videos on this channel, and I'll see you next time.